Hey people, I welcome you back to Caroline's Online Academy. In this series of videos, we are learning various concepts that are involved in accounting for share capital. And right now, we are touching forfeiture of shares. Forfeiture of shares is a very important concept from examination point of view for CBSE Class 12 and further higher studies examinations like CA Foundation or any other examination in which company accounts is being tested. It's very simple, my dear children. People complicate it a lot, but it's actually very simple and easy to do. And I'm going to teach you that concept in this video today. First, let me explain what forfeiture means. Forfeiture means to take back the shares and cancel those shares. Understood or not, my dear children? I mean, or to just take back the shares from the shareholder and cancel his membership actually, membership of the shareholder. Assume like 1,000 people have subscribed to a company's shares and all of them are paying their dues as and when it is called, like application, allotment, first call, second call, and all. And you see, one shareholder hasn't paid allotment money when it was made due, and he also didn't pay first call money. Now that actually puts all the other shareholders and the company at a disadvantage, right? Because the company is planning, the company has actually issued shares to raise capital in order to go ahead with the business operations that it has planned. Now, if some shareholders don't pay their dues, they are holding on to the shares. At the same time, they are not paying the amount that is supposed to be paid on the shares, which actually puts everyone else, including the company, at a disadvantage, as the company cannot go ahead with the planned operations due to lack of funds. All right. So the Companies Act gives a provision wherein it says that if the articles of association of the company so provide, then the company has the right to forfeit the shares of the shareholders who are defaulting. Okay, can you right away go and forfeit the shares? No. First, you got to give notice to them stating the fact that they haven't paid and therefore their shares might get forfeited if they do not pay up within a period of certain time according to the notice given to the shareholders. The time given to the shareholders should be a minimum period of 14 days. And if they still don't pay up, then the shares can be forfeited only if the articles of association of the company so provides. Now, what are we supposed to do when the shares are forfeited? We learned what we are supposed to do when we issue the shares. Now, how do we account for forfeiture of shares? That is what we're going to learn. And I've given you a problem here. It's an example problem. So it is only to help you understand the forfeiture entry. You don't have to pass all the journal entries to go to the forfeiture entry. You can also pass a forfeiture journal entry directly. As it is required in the exam. Like if they've asked for all the journal entries for all the transactions, you need to pass all the transactions. But even without passing the earlier entries, if the question requires you to post only the forfeiture entry, then you can go ahead and just post the forfeiture entry alone. Understood or not, my dear children? So let's look at the question. The question is slightly weird because I'm only issuing one share, but that is only for you to understand the whole thing properly. Kavya Limited issued one share of rupees 100 each payable as follows. On application 25, allotment 30, first call 30, and second call is remaining. Remaining will work out to be 15 rupees, that is 100 rupees issue price minus application money of 25 minus first call allotment of 30 and first call of 30. So that is 100 minus 85 is 15 rupees. The company received one application. It's actually one application here. Yeah, the company received one application from Shreyas and the share was issued, allotted. Shreyas did not pay first call and the share was forfeited and we got to pass the journal entry. Now it's not going to be like this in an ideal situation. You'll be issuing more than just one share. But in order to help you understand how forfeiture works, I'm taking this example. Just stay with me. The first journal entry, as you all very well know, is receiving application money. The transaction is, and the journal entry is bank account debit to share application account. So I'm going to do just that, to share application account, and that's how much, my dear children. The number of applications received multiplied by the application money receivable per share. In our question, it's just 25 rupees. So that's 25. And shares are then allotted, and therefore share application account will be debited, and share capital is credited. Share allotted, and entire application money will be transferred to share capital account. And then we're gonna go ahead and make the allotment money due. The journal entry for making allotment money due, share allotment account debit. to share capital allotment money made due. And the amount that you got to make allotment due on allotment is 30 rupees per share, and we've just allotted one share, so it is just 30 rupees in this question. And then, my dear children, the fourth journal entry would be to receive allotment money. Shreyas has paid the allotment money, and therefore it will be bank account debit to share first, sorry, allotment account. That is allotment money received. And that, my dear children, is the 30 rupees that we made due. And then we go ahead and make the first call due. And the journal entry for that is what, my dear children? It is share first call account debit to share capital. Share first call made due. And that's how much, my dear children. It's 30 as per the question. So that is 30 rupees. And then we got to receive share first call money, but unfortunately, Shreyas did not pay it. Am I right? So calls in arrears account debit to share first call account. Share first call money not received. There is only one share, right? So you just say first call money not received. And the amount would be 30 rupees that was not paid on the share first call. And they got to make share second call due, and then they got to receive. And that was also not paid. Obviously, first call is not paid, second call would not have been paid, right? So we make share second call due. And that is also not received. So calls in arrears account debit to share second call. The amount happens to be 15, my dear children. So this is 15. All right. So with that, we have passed the journal entries till the time of forfeiture. Like we have made all the calls, and our friend Shreyas did not pay the first call and second call. The question only says that he didn't pay the first call, but the question does not tell when the shares were forfeited. So we are assuming that the second call was also made. You got to assume like that for examination purposes. If the question does not tell when the shares were forfeited, you got to assume that all the calls were made and then the shares were forfeited. Understood? Now let's go ahead and look at understand some things. Now, whatever money was credited to share capital account in Shreyas' name will not be share capital anymore. Am I right, my dear children? See, when he was a shareholder, whatever we had received from him or whenever we called up, we credited share capital because he's a shareholder, the owner of the company. So whatever he pays or whatever he promises to pay us is capital, and therefore we credit it to capital account. But look at the situation now. We are forfeiting his shares. So is he going to be the shareholder anymore? No, he's not the shareholder anymore. Am I right or not? So share whatever we credited in share capital account in the defaulting shareholder's name should not remain in the share capital. Now, share capital is equity, which is a liability. And according to modern approach, if liability increases, you have to credit it. And if a liability decreases, you got to debit it. Am I right or not, my dear children? So share capital account, as we forfeit the shares, the balance in the capital account will reduce to the extent to the amount credited to the capital account while of the defaulting shareholder. The defaulting shareholders, whatever money has been credited in share capital account, whatever amount has been credited in the name of the defaulting shareholder to share capital account should not remain in share capital account, and therefore we got to debit it. Understood or not, my dear children? So we're going to go ahead and debit share capital account. Debit. And then, now whatever money that shareholder is paid till now, he's not paid the first and second call, right? But he has paid the application allotment money. Will the company refund it? Actually, the company need not refund it. Understood or not, my dear children? Shareholders defaulted, and therefore his share has been forfeited. Whatever money has been paid by the shareholder will not be refunded to him. If those shares are not refunded to him, what does it mean, my dear children? It is a profit for the company. Am I right or not, my dear children? It's a capital profit actually. It's a profit for the company from a capital transaction. That is a transaction that happens once in a while. Understood or not, my dear children? And when profit increases, what are you supposed to do? You got to credit the profit account. Ideally, this amount should go to capital reserve account, but at this point of time, we are not going to take it to capital reserve account. We'll keep it in a temporary control account called as share forfeiture account. I'll tell you why we are not taking it directly to capital reserve account. When I'm teaching you reissue of shares, at this point, you just understand that for some purpose, we're keeping it in a temporary profit account, reserve account called, it's not exactly reserve, temporary profit account called share forfeiture account. Understood or not, my dear children? So whatever money that was paid by the shareholder, defaulting shareholder, shall not be refunded to him after his shares are forfeited. Understood or not, my dear children? So that amount is actually a profit for the company. So we're keeping it in a profit account called to share forfeiture, called share forfeiture account or forfeited shares account. Understood or not, my dear children? So whenever our friend did not pay, we debited calls in arrears account. Am I right? Why did we debit calls in arrears account? We have made the calls due and it's time and he has not paid. So, but still, have we lost the right to receive money from him? No. At that point, before we forfeited the shares, we hadn't lost the right to receive money from him. But we wanted to underline the fact that this is actually an arrears. This fellow is not paid even after the calls became due, man. So what am I supposed to do? What am I doing? I'm taking that amount, whatever made that I made due, and keeping it in calls and arrears to signify the fact that this amount has been made due and it has not been made, brought, debited to, and is had not been paid by the shareholder who's defaulting. Sorry, sir. And is had not been paid by the shareholder who's defaulting. So the calls in arrears account is debited. But the calls in arrears account is an asset account. That is why it was debited. Why is it an asset? He's not paid till now, but the company still has a right to receive that money from him. Am I right or not, my decision? Okay. So till the time he forfeited the shares, it was an calls in arrears account, but that is also an asset which signifies that it is in delay, but still the company has the right to receive money from him. But now what happens, my dear children? I forfeited the shares. Do you think he'll go ahead and come and pay the calls and arrears now? He won't pay the remaining amount that is in arrears. Am I right or not, my dear children? So that calls and arrears asset is not an asset for me anymore. That asset is decreasing. And when asset decreases, what are you supposed to do? You got to credit, right? Now let me paraphrase that for you. When the shareholder defaulted, the amount defaulted by the defaulting shareholder was transferred to calls and arrears account to signify the fact that this amount has not been received even after the amount was made due. And calls and arrears account was debited because calls and arrears account represents the right of the company to receive money from the defaulting shareholder in the future. So a right to receive money is an asset for the company, and asset increases, and therefore calls and arrears account was debited. But after we have forfeited the shares, we don't have any right anymore to receive money from the defaulting shareholder. So that calls and arrears account actually represented our right to receive money from the shareholder, which was an asset. That asset is not there anymore. So when asset decreases, you got to credit it, and therefore calls and arrears account has been credited. Understood or not, my dear children? That is the logic as per modern approach. Shreyas's shares forfeited. All right. So as I told you, whatever has been credited in the name of share capital to Shreyas' account has to be debited to share capital account when it forfeited, because it's not supposed to remain in share capital account anymore. Now, if you look at the previous entries, you will understand that while allotting the shares, we credited share capital account. After that, whenever we made calls due, we credit share capital. So basically, with how much amount do we credit share capital account in issue of shares, my dear children? It is a called up value of shares, my dear children, because whenever we call up, we credit share capital account. So the called up value only has been credited to share capital. So now we got to remove it, right? So what are we supposed to do? Called up value per share, because that is the amount that was credited to share capital account, multiplied by the number of shares forfeited. Multiplied by the number of shares forfeited. Understood or not, my dear children? I hope you're able to see this. Make it bold and underline. So what is the called up value per share in this question, my dear children? What is the called up value per share in this question? The called up value per share is 100 rupees because we made all the calls. Am I right or not, my dear children? We made all the calls. Am I right or not? That is what we assumed, right? They haven't told when we forfeited the shares. So whenever they haven't given us the information on when we have forfeited the shares, we're supposed to assume that all calls were made and then forfeited. So if we have made all the calls, then 100 rupees is the amount forfeited, my dear children, per share. Amount called up per share, my dear children. And the number of shares forfeited is, in this question, we are just assuming one share was forfeited. So into one, so 100. Okay, that's done. All right. The next thing would be share forfeiture account. What did I tell you share forfeiture account will be credited with? The profit on forfeiture. Understood or not? Will be credited with a profit on forfeiture. What is the profit on forfeiture? Whatever amount of money was paid by that defaulting shareholder is the profit of the company, because we are not going to refund that money anymore. Understood or not, my dear children? So it will be credited up with the paid up value per share multiplied by the number of shares forfeited. All right. So what is the paid up value per share, my dear children? In this question, our friend has not paid first call and second call. He's paid what? Application money and allotment money. He's not paid first call and second call, but he has paid application money and allotment money. So that is 25 plus 30, which is 55. So 55 rupees will be credited to share forfeiture account. And what will happen to your calls in arrears account? Whatever amount has been paid, called up, but unpaid per share. That is what will be sitting in calls in arrears account. Am I right or not, my dear children? Whatever has been called up and unpaid, whatever has been called up and paid will be sitting in share capital account or whichever bank account or wherever the money was received. What will be sitting in calls in arrears account? Called up but unpaid amount per share. Called up but unpaid amount per share into number of shares forfeited, my dear children. So what is the called up amount into but unpaid amount? Our friend did not pay the first call and second call. Am I right or not, my dear children? So calls in arrears was debited by 30 for the first call and 15 for the second call. Therefore, call for share forfeiture account will also be credited by 45. 30 plus 15. Understood or not, my dear children? So that is the journal entry for forfeiture. It's as simple as that. Share capital account will be debited with the called up value per share, the number of shares forfeited, because that is the amount of money that was credited to share capital account in the name of the defaulting shareholder. Share forfeiture account will be credited with the paid up value per share into number of shares forfeited. This is nothing but the profit on forfeiture. Profit on forfeiture. As it's a profit, it is credited to the profit account called a share forfeiture account. Ideally, it's a capital profit and supposed to go to capital reserve account, but we are keeping it in share forfeiture account for a certain reason. We'll keep it for some time. And then whatever amount we had debited calls in arrears account will be credited now, because they're not going to pay that money anymore. And what amount do we usually debit calls in arrears account with? It is a called up but unpaid value per share into number of shares forfeited. Understood or not, my children? Now, what is share forfeiture? It is a profit on forfeiture. The amount credited to share forfeiture account is called as the profit on forfeiture. Remember this. It'll be very useful in the future when we solve more problems. We'll use this term a lot in the future. What is the profit on forfeiture? It is the amount credited to share forfeiture while forfeiting. What amount do we credit to share forfeiture account while forfeiting? The paid up value per share into number of shares, or the total paid up value of the shareholder whose shares are being forfeited. Understood or not, my dear children? And with this, we have come to the end of this video. I hope I've explained share forfeiture correctly for you with the example. As you can see, share capital account is debited with 100. That is the amount that we called up till now. And the green is the calls in arrears. And the amount credited to share forfeiture account is the amount paid. All right, children. So with that, we've come to the end of this video. I hope you liked it and you understood it. Please do like, share, comment, subscribe. Nobody's doing it. Please do it. And let me know if you find this content useful or not. And if you have any doubts, please do leave a comment or send a message or send an email to the email ID, and I'll try to explain it. And if you have a problem that you want me to solve, please do send it to me. You people take care, have fun, and hope to see you on another video tomorrow. Till then, it's goodbye from me. Bye.